Alright, gang, what's going on? I hope you had a fantastic weekend. I can't believe it's already Sunday. This weekend flew by for me. But let's go ahead and jump into this watch list. I got 5 stocks I'm looking at here for you guys. So, first one that I'm looking at is going to be DRI, right? This is Darden Restaurants. Now this one I just want to go ahead and play straight long. As you can see, ever since COVID, it's been making a slow and steady run back up here. Okay, and we're coming up to those highs. We did pull back here a little bit to the 8 EMA, and I want to take it long. Okay, so what I'm looking at is getting well below the 200-day moving average here. And I'm going to do it with a short put and look for it to run back up, break through this resistance, and head towards those highs. So, December, I want to sell. Now, liquidity is a little low, right? Only 800, not even 800,000 on Friday on the actual shares. The options are a little low. So, don't chase it down. If you don't get a fill, you don't get a fill. But what I'm looking at is December, and I want to sell the 135 puts. I'd like to get, call it $1.20 to $1.30 here. And that would give me a 93 pop, which is really good, while costing about $1,500. So it's a little bit higher on the buying power to credit ratio. However, for a 93 pop, I am absolutely okay putting up that extra buying power. Okay. Now, if you needed to define it, yes, you can. You got to go a little bit higher here, up to that 34 delta, and sell the 145s and buy those 140s. Try to get $1.30 to $1.40 for it. It'll give you almost an 80% pop, which is really good. Okay, and then keep you defined. And those 145s, while it is above the 200-day, it's still below the 8, 21, and 50 moving averages. Okay. Now the next one that I'm looking at is EA Sports, so just EA. And I want to do like a slightly long skewed strangle here. You can see if I zoom out on this thing, and this is the last year here on the weekly chart, it's been pretty much sideways, right? It has some moves, but ultimately it's still sideways and in this channel. We're coming up to some resistance right now here at about 140, we're going to call it 146.72, but it does got a good squeeze, upward momentum. The weekly chart also has a good squeeze here with upward momentum. So if we break out above that, we got run room all the way to those 150s. So what I'm looking at doing is just kind of covering support and covering additional run room should it break out. So with this one, I want to sell the 130 puts and those 165 calls. Try to get at least, let's call it $1.50, down there on the bit. It's going to lean you just one delta long, give you pretty much an 80% pop, and cost about $1,400. So not bad. Defined risk, I probably wouldn't do it. And the credit's a little low, 95 cents. So I really would stay away from that. If you don't want to do the undefined, probably should pass on this one. Credit's just too low. Okay. The next one that I'm looking at is going to be Coke with a covered call. Okay. So Coke, again, another one, right? That has been ever since COVID, just making a slow and steady trek back up. And covered calls are a bullish move, even though you were selling a call on it. So what I would like to do here is just sell a covered call. Let me take this bullish, and we're going to look for the runs. I don't expect it to hit 60, but not in this cycle. But I do like it long. And we actually got a dividend coming up here at the end of the month. So if it doesn't reach its profit target by then, it collect a little bit of a dividend. Dividends are currently 42 cents a share at the moment. So with Coke, what I'm looking at doing is obviously buying 100 shares and then coming into December and selling the 34 delta, right? The 34 delta call. So that's the 57.5 calls. And that's going to be about 56.5 debit, which, if you take it at 56.25, your buying power requirement is only about $2,800. The max profit on this is $125. And what that just means is if on expiration day you are in the money here and they exercise that and you pull away your shares, you'll make 125 bucks. What I normally do is I look to see what my max profit is, and then when I reach 50% of the max profit potential, I close the trade. Okay, so in this case it's what, 125, so I'd be looking for like $75, right? Is that right? No, probably not. You get the point here. My math is off today, guys. Let's see. 62 and a half. So, 75, 60 to 70 bucks, per contract, obviously per share, is what I'd be looking at on this one. So, and then of course, you collect your dividends. Now, if we're not at 50% or in the money by expiration, then of course we would roll this one out, take it over here to January, and sell the same one again. Okay, and just keep repeating the process. Now, if that is too much money, you can do what's called a poor man's covered call. Come over here, sell your 57s, okay, and then I would go probably March, give it some time, and then selling in the, or buying in the money call. Okay, as you can see, this debit is only $245. It does not give you a max profit potential because you're doing two different styles here. So I would just be looking for a profit that you're okay with, and then taking that trade off. Okay, but you also do not collect a dividend. All right, next one is LVS. I want to take this one slightly short here. Las Vegas Sands has not been doing that great ever since the earnings 2 cycles ago. It's really just been in this channel, and then we had some bad news here, and it's just hanging out. So I'm going to cover below the lows, and then obviously cover above multiple resistance spots here to the upside. So with LVS, December, I want to sell that 33 put and sell that 48 call. I would like to get at least 50 cents, if not more for it, minimum of 2 contracts. At that rate, it's 5 short deltas and 81 pop, and it's like 800 bucks to put on. So super cheap, way past expected move. I like this play. Okay. And then the last one here, you guys, is going to be WYNN, right? Another strangle, another slightly short, and also looking at this one, covering the low here and covering past the 200 day. We got multiple lines. We have to get gap fill here. Then we got resistance, resistance, and obviously the 200 day. While support, and you can't see it because I'm not zoomed in, is all 3 moving averages, and then 1, 2, and 3 lines. So we're covering a lot of wiggle room here. So again, on this one, I want to sell in December those 77.5 puts and those 115 calls. I would like to get at least $1.40 for it. This would give me 83 pop. Almost 4 deltas short, and cost less than $1,000 to put on. Okay, and that's it, gang. That's all I got for you. I hope you enjoy the rest of your weekend. Take care, and maybe one day I'll see you in chat.